As the latest update in the ongoing US-EU trade talks, US Commerce Secretary Howard Lutnick said that the European Union must open its markets to American exports if it wants to avoid a sweeping 30% tariff set to effect by August the 1st. Speaking to Fox News today, Lutnick said the question is, do they offer President Trump a good enough deal that is worth it for him to step off the 30% tariffs that he has set? Let's take a listen in to his full comments.
Okay, so no extensions, no more grace periods. August 1st, the tariffs are set. They'll go into place. Customs will start collecting the money, and off we go. Obviously, after August 1st, people can still talk to President Trump. I mean, he's always willing to listen. And between now and then, I think the president's going to talk to a lot of people. Whether they can make him happy is another question, but the president's definitely willing to negotiate and talk to the big economies for sure. Europe needs to make a deal and wants to make a deal, and they are flying to Scotland to make a deal with President Trump.
Especially the younger generation very much care about TikTok not going away.
I mean, the president really likes TikTok, and he said it over and over again because, you know, it was a good way to communicate.
He added that President Trump is pushing to expand access for US businesses and sees a 50-50 shot in reaching an agreement with the European Union. Lutnick emphasized that while Brussels appears eager for a deal, the final decision will rest with Trump. Talks between the EU and the US are still ongoing, with key sticking points including auto tariffs and broader market access. We're now joined by Dr. Ajay Jua. He's a former Secretary of Commerce and senior economist. Thank you very much, Dr. Jua, for joining us on the program, as always. As the US approaches a decision on an imposing 30% tariff on the European Union, how do you assess the economic implications for both sides? And what would such a tariff mean for the broader global trade landscape?
Thank you very much for having me on your show.
Pleasure.
A 30% tariff, which is likely to kick off on the 1st of August if there's no agreement entered in between the US and the EU by that date, is going to be, I think, too high. Too high for the exporters of EU and too high for the consumers of these products in the United States. As you know, over $600 billion of exports took place from the US, from the European Union to the US last year. And the exports from the US in turn were 370, which means $236 billion of more trade, more export, kind of a trade deficit of the US. So yes, by 30% levy of it, bringing in 30% duty, the deficit might come down. But the costs of these products would also go up in the United States. So what has been agreed to so far by President Ursula von der Leyen and the member nations of the EU was a 15% tariff on, instead of the current level, a flat 15% tariff on the European goods going into the US, but exemptions on the transportation sector, broadly consisting of aviation, aviation parts, etc., and willingness to pay some amount of duty on automobile and automobile components going from the US. At the same time, EU had sought exemption on several spirits which go from Europe to the EU, on machinery, as well as pharmaceuticals.
Dr. Jua, I hope you don't mind me interrupting you, apologies, but Howard Lutnick's statement implies that the European Union must open its markets to American exports to avoid this tariff. From an economic standpoint, how likely is the European Union to make significant concessions here?
I think the canvas is between 15 and 30%. 15% they have agreed to. The United States is threatening to get back to 30%, which it had imposed earlier, but was stayed. I think 2 or 3% more is probably the maximum, which would be optimum. I say optimum because the US is looking at it from the point of view of revenue. The European countries are looking at it in terms of competitiveness of other exporters, exporting nations, including China, and the scope for exports for them would come down. Not that the US is going to consume less in the short run, but in the long run, even that would get affected if the duty levels remain very high. So I think prudence and kind of moderation on both the sides is needed. And I say on both the sides specifically because President Trump has two causes of, so to say, complaint against the EU. Number one, that
Yes.
it's the United States which has been bearing the cost of defending the US, defending the European Union through the NATO by and large, and the states are spending less, the member states are spending less, and second, of a huge trade deficit of over $200 billion, which the US has, and he would like to bridge that. So I think a rational approach, accepting 15 to 20% duty,
Yes.
might be the answer or the way forward.
Dr. Ajay Jua, thank you very much for joining us here on NewsX World. Pleasure having you. We now move on now and